Hey everybody, welcome back to the channel. Today we're going to be looking at Genmab ADR, that is ticker symbol GMAB. This is a Denmark-based biotech company. Typically with foreign stocks, anything outside of the US, you'll see on charts, daily charts, there's a lot of gaps up and down. So typically if the stock is going to be going up, the stock usually closes all gaps or tries to. Um, and on the way down, it will also close gaps. So this is a $21 stock. Excuse me. Let's get out of this. $21 stock. Wow, it's been going down basically for the last 2 years. We saw a double top around $47 twice, and now it is coming back down to a good area of consolidation around 23 to $13, which is fantastico. Uh, so strength, momentum, money flow, relative momentum indicator. We'll take a peek. We're also going to do some advanced charting on think or swim. Have I done swim before? I have. Wow, go me. I love when my past self helps my future self. So we're going to look at areas of support here because really the big question is when is this stock going to stop going down? My hunch is gonna say probably between $13 and 19. But we'll run the calculation. We'll see if the stock is worth $21.80. Is it worth more? Is it worth less? We'll see what's going on. We'll see what institutions and hedge funds are doing. Are they loading the boat? So looking here, well, let's look at our indicators first. Our RSI is with the bears. You can see it's going down. Typically, it shows that there's not a lot of buyers, and that is reflected on this chart. You can see the stock price has been going down now for about 2 years now. Momentum looks like it tried to reverse, and now it's kind of just free falling. Money flow kind of looks like there's some interest in purchasing the stock with by hedge funds and institutions. Our relative momentum indicators all the way down here, which is insane. This goes all the way back to 2013. So we have relative momentum indicator data that far only. So we fell through 23.45, which was a critical support. Um, so looking down here, 2023 they did 2.39 billion in sales. 2024 trailing 12 months are at 2.87 billion, which is amazing. About a $410 million improvement, which is awesome. They are profitable, which is fantastic. The price to earnings is fairly overvalued. However, if we take into consideration the same revenue, EPS, and gross margins going into 2025, the stock would be it would be less overvalued. So it's going to be less overvalued, but still slightly overvalued. Quick ratio is 5. That's amazing. Very low debt. EPS past 5 years solid. Sales past 5 years solid. So this company is resilient. They probably have a really sound product in the pharmaceutical industry. Gross margins 96%. Every $100 they spend, they get back $196. That is incredible. A lot of shares outstanding, not any concern at all. Actually, that's really good because we can see in 2023 there was 653 million. Now 2024 there's 635 million. So it is being bought up at least to the tune of 15 million shares year over year at least. So that is amazing. Sales are just continuing to crush. That's amazing. Earnings per share, we can see that it's like plateauing. We see a nice plateau stair step 0.52, 0.73, 0.97. 2024 it'll probably be 1.12, 1.18, 1.24 is what I would guess, but we'll see. So I mean, this is just looking really healthy overall. Let's go ahead and open this up. We'll run our calculation to see what the potential stock price could be. Market cap is 13 billion 850 million. Good for them. Income again, they're profitable, 674 million 780,000. Insane. They might offer a dividend in the next few years. Sales are 2,870,000,000. And I only say that if they continue to crush it and they have a good roadmap, etc. Um, they're very profitable. That's so good. Let's just go down here and take a peek. Q3 this year, 815 million. Q3 last year, 692 million. So beautiful year-over-year increase. Cost of goods sold. Wow, they did do a lot more. They spent quite a bit more money than they did last year, but they did make almost $100 million more in gross profit. So that's totally fine. Gross margin 95% compared to 97% last year. But you can see it's hovering the last trailing 12 months around between 95 and 97. That's just gorgeous, honestly. Shares outstanding going down, which is good. It shows that there's appetite for owning these shares, which is good. This is in USD, good. Okay, so they have 2.5 billion in cash, which is insane. 2,592,710,000. That's awesome. Debt looks low, 134,140,000. That's nothing. Okay, total assets 5.9 billion. Total liabilities 1.158 billion. I just spit a little bit. That's fantastic. This is a really well-run company. I can't, yeah. I mean, look, the quick ratio has always been amazing. They had 3 billion, 3.5 billion, 4.1, 4.2 billion in cash. Gosh, and if that's just sitting there, probably in an account making 3-4% interest, wow. Insane, just beautiful. So this is amazing. No red flags whatsoever. Okay, now we're gonna go back up here and we're gonna run this. We have 635,140,000. This is a stock price of $31.26. And stock is 21 now, so that's good. Analysts have a $36 price target, which lines up with what I have. So I'm showing that this stock is currently undervalued. FinViz typically does take a bit of time to refresh. So if that is true, institutions should own more than 8% if this stock is truly undervalued. So old data is 8.28%. New data, we've got to calculate by hand. So let's bust out the old calculator. While this works, I'm gonna drink some water. Don't forget to drink your water. All right. Oops. I'm gonna divide this by 635,140,000. Institutions actually own 10.33%. So that is at least 2% more. And we have to look at the share outstanding size. That's a pretty substantial amount for this level, which is good. We are almost at all-time high when it comes to institutional ownership, so that is good. We have BlackRock. They actually increased their position earlier this year in February. So they're down. Wow. Okay. IBB, NASDAQ, biotech ETF. This is a solid company, but we just need to find some support. Nice. They added 10%. Harding, 3 million shares. First Trust, New York Stock Exchange, biotech fund. A lot of biotech funds. 15 million shares. Alliance Bernstein. They only sold out 0.67%, which is not that much. 2.3 million shares. They barely sold anything. Citadel added 2.28%. Morgan Stanley added 59%. Bank of America decreased 3%. Orbis Allen Gray added 1.6 million shares. First Trust added 15%. I want to see a 4 million. Capital International Investors added 4.5%, 4.4 million shares. 1.7. Renaissance Technologies, they're always early. I feel like they always know something. BlackRock shows they decreased here. Show me like a huge, huge position. I want to see like an 8-figure position in shares. 2.2 million, 4.5 million. Okay, so it's only showing through the last 6 months, which is fine. Okay, so this is good. However, you just have to note the trend is your friend until the end, and I don't think we're at the end yet. However, the stock is looking appetizing. I don't know when I drew this, but this is gorgeous because every time the stock has touched this range right here, it's gone from $11.15 to 49. So several 100% increase. It looks like a Elliott wave where we've got, not that. So we've got 1, 2, 3, 4, 5. And then we've got A, B, and then C has just been bloop. So it looks like we've gone through the Elliott wave cycle, in my opinion. We just need to see how this is a lot of freaking selling the last 2 months. Whoa, 29 million, 29 million. Wow. So we might, gosh, get to 14. That would be a steal of a deal, in my opinion. It's gone through the Elliott wave cycle. We're gonna have to see how the stock reacts to this trend line right here. So for December, high likely chance we get to $21.10. But what we want to see is maybe another test and the stock closes around $21.40. We want to see the stock stay above this line at least for 3 months. But it's gone through the Elliott wave cycle, so that is good. This is a wait and see at the moment, honestly. And it's not because the stock is horrible. And let's just draw like right there. Well, we've been in this channel as well. Gosh, that's really nasty. Like right there. We've got a nice little area of arbitrage right in here if it can get down here. However, we kind of want to see it to level out and then maybe break this channel. So, this might be a short video just because we've gone through an Elliott wave cycle. Now it's really up to the company to execute. And, excuse me. Wow, looks like next year they're guiding for low. They're guiding lower. But they could be doing that on purpose because if they aim low, they'll end up high. So they could be doing this on purpose. Let's go down and look at this really quick. I just want to see if their profitability continues to climb. So Q1 192 compared to 32, that's insane. Q2 203 compared to 198, it's close. Q3 186 compared to 310. So that's a little iffy. I wonder if that's why we're seeing a ton. That's why we may have seen this here. That makes sense. Interesting. Man. Revenues just continue to do well, but this net income piece, kind of a red flag. Well, beige flag. I mean, it's still very gorgeous, but quite a significant difference. I'm guessing the stock went down on their earnings day. Let's see. November 6th. Let's see. Yeah, earnings. Yeah, so a few days after it went down for sure. Got as high as 23 and then it dipped to 20. So over 10% decrease, but then it bounced up. So yeah, we're gonna wait this one out for sure. Again, just paying really close attention to this support right here. And again, I'll just make it purple and thick. Kind of thick. So again, this purple line has been a really good indicator so far, except we're going to hit some resistance here. The company literally has 2 quarters to bounce back to show that this net income was just a one-off. They literally have 2 quarters. Wow. Q4 2023, they did 674 million. The year before that, 716. So they actually did not do well the fourth quarter of 2023, at least in terms of revenue. I mean, they did solid, but compared to the year before, and then their net income was 92. So they still improved 92 from 80. So that's really good, actually. And then it just jumped like crazy. So, I mean, if you can weather the risk, I mean, they're just killing it overall. Honestly, they're going to continue to kill it. There's just small details like this that we just saw. And this is a good sign right here. Our relative momentum indicator is coming off. Oh, but this is on the daily. So if you have a high risk tolerance, um, you might be able to weather the $21. Maybe it goes from 21 to 15. I think over the next year, if you've got the patience and the stock continues to execute, grow revenues, the margins stay in the 90 percentile, that would be amazing. Net income improves or stabilizes above or at a decent area. Um, that will be the make or break if the stock stays above 20s or if it gets into the teens. So honestly, there's a lot of upside for this stock. It's just going to be a matter of tiny details of the gross margins. And let's just go back here really quick. Year to date, they're down 30%. So this could be their year. I mean, they've been going down for 2 years now. If you bought this stock in 2019, you're flat and you're probably upset because you didn't take advantage of the appreciation. So getting it down here compared to 2019, they did 800 million in sales. Fast forward to 2024, they're at 2,800 million. So obviously they're in a much better place than they were here. So they did 800 million here. Now we're at 2.8 billion. And now we're just getting into the intricacies of, oh, the net income was drastically lower for that one quarter. So I like this. Insiders, hedge funds like this. I'm risk averse, so this is something I would consider adding. I'd want to see how the next few months play out, at least till January or into February. I want to see how their earnings go. And honestly, they're just crushing it. So if you've got time, it might even be a good time to just start picking up shares now. By the time you go to sell in 1 year, you could be at the long-term capital gains rate, potentially at a um, profit in the lower tax bracket. So this is like kind of my bread and butter of things I usually like. However, I'd want to kind of add this one to my Robinhood trading account because I could see a good opportunity within this range the next like 6 months. So the stock's been down for 2 years. I think if you've got a decent risk reward tolerance, risk appetite, maybe start nibbling here. Just let it do its thing. Maybe it gets down here. That would be I wouldn't say a once in a lifetime opportunity. I'd say a once in a decade opportunity. Last time it was trading under here was around $4 to 11, and it went over 1,000x from $4. So That would be fantastic. And what would also be set up, and this is just like looking way into the future and probably way over everybody's head, but watch this. Just watch. Don't believe me, just watch. Go down to the $2.80 to 49. Elliott Wave 1. And we're going to make this very, very apparent. We'll call it green and super duper thick. Elliott Wave 1. And then we'll just say Elliott Wave 2 right here. And then the third leg of the Elliott wave is always the freaking strongest, and it's usually double the first one. And we can test that theory. We can test that theory because we went through, let's pause. Let's go back and look at our original Elliott wave. So this was wave 1, wave 2, wave 3. So wave 3 is usually double wave 1. So we're going to duplicate wave 1 twice from our low. So right here, duplicate. Okay. So almost. So $49 was the top of the wave. 53 was double the leg 1, the wave 1. So let's remove this one and let's remove this. So that's basically a 10% short, not short. That's a 10%. If we're looking at leg 1 you being usually double, we need to decrease that by 10%. So what we're going to do is back to this, duplicate, and duplicate. What the heck? Okay. We're going to take 10% off of this, which is 108. So 10.8. So this will be 90. This will give us a $90 price target, in my opinion. If we can get down here and the company still continues to smash, I think we go to $90. Obviously, it's not going to take us 17 years. I think it'll happen much faster, kind of like how we have this. From leg 1 to the high, it was leg 1 finished. Let's see. So leg 1 finished 8/1/17 and the high was 8/1/2020. So 4 years. It took 4 years from the leg 1 high, which this is our leg 1 high, and now 4 years down, or I'm sorry, 4 years to get to the all-time high. So 2021, so it's saying next August, it could get to $90. I don't know about that. We'll see. But that's what I've got. So I really like this one. Amazing risk reward. Honestly, something I'll probably add in the next 3 months. Hopefully in the teens, because that would be wonderful. Institutions like it, they're executing well. Net income, watch the net income. It's a formality in my opinion, but they're just crushing it. They have $2 billion in cash. What are they doing? I don't know. Anyway, thank you so much for watching. Take care. See you next time.